following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Sorry for getting started a little late here. A little technical difficulties on my side. Let's take a look immediately at the Shanghai, and we're going to have Steve Banger on at the first break for some of the show and thereafter today, and I think you'll enjoy it. We're going to be talking about more of a macro view and what's going on with a couple of indicators that he's looking at. So first things first, looking at the Shanghai, you know, we've talked about this, we've talked about this new profile, and again, this is our very long-term weekly view here. This new profile, this very thin thing that has appeared last week, and we're compressing up, using that as a little bit of a lever here. You know, kind of, if you look at this, forget the profiles for a second too. You've got higher lows, compression up into this area. This is indicative a lot of times of a breakout here, and it's going to be breaking out above profiles. So, and when I say is going to be, it may not happen, but a lot of things lining up here for you know, the markets to continue to just edge a little bit higher in the interim. A lot of the world stock markets are doing, you know, kind of their on all-time highs type situation right now, and the Shanghai will probably not be left behind if the powers that be over in China have anything to do with it. That's just the way things work over there. So be prepared for that. We've talked about, again, yesterday, in fact, about trading off of this 2964. Had a decent move here, 2964 up into 2982. Here's the daily. But again, that weekly's just all important. And this morning we're trading about 30.50 as of yesterday's close, actually, in Shanghai, or today's close in Shanghai. Here we go. All right, so a couple of usual suspects here before we bring Steve on, just to kind of cover what's going on. Man, crude oil did not stay away from that 43.33 area, and then we obviously had a close above that yesterday. We talked about not really trading down here. The short trade was kind of, you know, gave us some points. We talked about that in that reversal yesterday, or the day before, actually. Close above, we kind of used that to look at as support now. Had a little move up this morning, up into 44.17, so almost a buck above that inflection point. And right now, the short trade is just not in order at this state anymore. So that's the way I'm looking at it. When we were down here, we talked about no good risk-reward scenarios down here, being short or long. If you guys caught a long trade, that's great. Here's those 240s. You can always play around with this for the shorter-term trade. And now we're clearing profiles above 43.33, so you got to really, really take that in consideration now. And know when to, you know, kind of sit tight or sit on the sidelines on the short side. This is one of them. Remember, we break those barriers. That's just the way we turn the wrench. Gold, again, coming off this 1366, 67. That's, you know, again, I'm not trying to confuse my outlook on gold in general by shorting against that. But if you did that, more power to you. Reached a high yesterday, 1364. So got very close to it and backed off again. But again, I mean, I'm looking at this from the long side pretty much primarily. And that 1347 is a big number for me. And if you look at this, backing up again, higher lows, higher lows, higher lows, kind of like the Shanghai situation almost in a little bit different light. But, you know, the long-term trend, long-term trade, in my opinion, still in force. Nothing goes in a straight line. The 10-year, man, God, oof, what an insane beast this thing is. God, it's just I'm speechless, you know. keep turning the rents the same way. They're talking about, oh, they got to raise rates now. You know, a couple of Fed governors are coming out, their usual thing, but nobody believes them anymore. Rightfully so. Dollar still the long trade, in my opinion, even though we're in the 20 trillion area. To put it in perspective, if we paid $1 billion a day. Actually, I think the interest is I want to say it's $2 billion a day, or close to that. Maybe somebody in the den knows that. That's just that's sick. All right. Anyway, it is what it is. Don't overthink it. The 10-year trade, it's on support, and that's the way the ball bounces with that. S&Ps, again, the sun comes up and the moon goes up at night, and the S&Ps go up in the morning. Here we are. Again, you know, all internals looking relatively good. We're sitting around these profile highs on the daily 2083.50. I don't see how this is a Friday. I don't really see a lot of, you know, reasons to get short this thing right now. Your 240s, you've got 2181 sitting there too. So again, not wanting to back off, and the financial markets have kind of become commoditized. Never thought I'd say that, but that's kind of where we're at right now. We're going to, I think are we coming into break now? Okay. I think we're supposed to be going into break. I'm not sure. I don't hear the music. Okay, just communicating with the home base there. I think we'll just keep going, I guess. We usually have a break around this time. Okay, all right. So, looking at silver. Okay, here comes the break. Guys, we're going to be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. Looks like we might not be having Steve on here. Some technical issues going on, so we'll keep trying. Silver, taking a look at silver just to kind of give some updates on this one. Again, I think gold's the much better trade here. So, again, kind of putting my eggs in the gold basket, if you will. Bean's got some news coming out at noon. Our friend in the den is reminding everyone. So, again, this $10 bushel area, we kind of backed off 9.99 and a half. So, what do you do with this now? If you want to roll the dice before some news coming out on the grain market, that's up to you. But again, it's a lot of times it's a lot easier to trade the reaction on situations like that. A couple of ETFs. Let's take a look at the XLU as the 10 years kind of holding up on support. As we look at this, 50-41, not a real big wide profile, but as the 10-year continues to hang in there and hold up as the market continues to go higher, that thirst for yield situation, you've got a new profile in the XLU. You've got the bottom of the profile, 50-74, looks like, and we're up this morning, 50-94. So, again, something that, again, turn the rinse the same way, find support on an instrument that's heading north and the market heading straight up and the 10-year kind of hanging in there. If we get any rallies in the 10-year, you know what's going to happen with this thing. XLF, again, not the best trade out there in my opinion. I'm not believing all the things that people are saying that this is going to be going on a tear anytime soon. XLE, looks like we got 68.30 this morning. Oil's obviously edging a little higher, 69.03, unfair highs on the weekly. Backed off a little bit off of that yesterday, but again, we've been talking about trading the strong stocks in the XLE and selling the weak stocks based on, the oil situation, and we're going to take a look at those a little bit later. All righty, natural gas. All right, well, you see where we're at. This is kind of Custer's last stance here. And by the way, I'm going overseas to Asia on Monday morning, out of Chicago. And I'm looking at these things coming out of Thailand here. Hope this is not some kind of endemic new crazy attitude over there. So I'll be doing the show Tuesday, Wednesday from over in the office in the Philippines, unless something crazy happens. We're going to take a look at the healthcare sector. Come on, charts. Here we go. So, market kind of edging higher. Couple of stocks in here in the XLV, GILD. PPI is in about 8 minutes, guys, just to remind you. This Gilead Science trade, I really like this trade to head lower, even though the markets continue headed higher. This is the type of action you want to see if any type of market pullbacks. 80-32 playing defense above there. I know you're like, wow, what in the world? Gilead Sciences heading lower again. Showing itself right now, folks. That's all I can say. Let's take a look at Caterpillar. And don't have a print this morning. Somebody's asking about shorting this, and I just don't see it yet. I mean, I see hints of, possibilities of pullbacks to support, but this has been a stock that's, just, again, kind of fought off a lot of things lately. If the dollar rallies, it, could affect this a little bit long term, but I can see better things to kind of put your shorts on for. Let's take a look at Alibaba earnings. All right, so looks like we're printing 93 this morning. This is the, and this is kind of what I think. This is kind of what I think will happen with the Shanghai as that action we kind of looked at earlier. I mean, technically, these have not a lot of connection here in what I'm trying to say with the Shanghai, but as we kind of compressed up into that 3,000, 3,050 area on the Shanghai, we're probably going to get one of these. It looks like if you're short the Shanghai right now, you got to be extremely concerned. But Alibaba breaking out of 80.66 and having some good news to boot. So this morning we're trading 93. Here's the daily. Is it time to look at this and try to trade a pullback? I think you're playing with fire on this one. So I think you got better things to devote energy and capital to. Kohl's, KSS. All right, as we look at Kohl's here, let's just see. Looks like we're printing 44.19 this morning. So some decent news out, and we've gotten above 43.08. So I kind of like this getting back down below 43.08 and being able to play this from the short side. If you look at this long term, I mean, this might be a blip on the screen for this particular company. But they also could be shaving some things like Macy's. Macy's beating some estimates and also closing, 100 stores? 14, 15% of their store. Or how many? Yeah, I think it's over 10%. So Macy's, similar situation. What do you do with this now? Nothing to really hang on to play defense on Macy's. Nordstrom, we talked about that yesterday, a very similar situation. NVIDIA. Hachi mama. Ooh. Good God. All right, so has this thing gone too high? Let's see where we're at this morning. We're printing about 61.75, so up a little bit more this morning. And things on their highs go higher, guys. And as you can see, a strong stock in a market that was going sideways, finding support and finding breakouts. We've got a situation here that, it can go higher, so I don't think we're going to be able to look at that from the short side at all and trading any pullbacks right now. Let's take a look at Twitter. Printing 1985 this morning. And as we look at this, has broken out above this 1890 area. That's going to be support on Twitter right now. And again, you guys have probably been reading all the stories here. This is kind of the, had some technical breakouts before around this 1533 area. And now we're breaking out again. So worm turning a little bit on this particular stock again. I think we should have a break here pretty soon. Let's take a look at Apple. All right. Apple, again, with the breakout, you got to be able to block out the short side when things like this happen. They had their earnings. They've had, some good earnings, technical reasons to not be short this. And we've also got another profile appearing below price action on the daily on Apple, so that's bullish. We'll be right back, guys.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. So we were kind of wrapping up with Apple here. And, when you have a profile appearing below price action, it seemingly is a super high probability situation. Every time I go over something like this with you guys, I'm not going to say it's like clockwork. It never happens. But 106.47 is now support on Apple. It doesn't mean you need to trade this down to that area. Remember, like we talk about all the time, you're blocking out the short side and you're trying to find reasons on the long side. So this is one of those situations. And when you see something like that happening, you know that that's not a bad thing in general, because the trend obviously has been broken up here, and that's a risky trade. Make it easy on yourself. Amazon, let's take a look at this one. And if I can spell the symbol right, that would be good. Here we go. All right, so again, this is kind of the theme that we always use, blocking out one side of the marketplace, blocking out the short side on on Amazon, getting these indications, especially you got a technically ripe situation on the long side, and you've also got a relative strength situation here. So make it easy on yourself. Don't overthink something. It is what it is. This is where the buyers and sellers have determined this thing right now. And again, it's nothing to play around with on the short side. And here's the dailies. That was the weekly. It is what it is, folks. The materials. This is one we looked at yesterday that I talked about 3M. And we talked about this thing looking ripe for a move up, and I liked how it's been acting lately. And we had a little bit of a move in this yesterday, which was nice, from like the 178s of the world up into 181. You've got pretty much targets up top, 182-ish neighborhood on this. We're trading about 181.25 this morning, so nice little pop in a stock that we were looking at. And of course, I'm only going to show you the winners, folks. I'm just kidding. I try to show you where we're having issues too on some things that we've talked about. Let's go into the ETF world for a second in the scanner, and let's hit the XLE. Let's look at a couple of things that. Here's our little buddy SWN, and not exactly it didn't cooperate exactly with that move up yesterday in oil, but again, this is kind of a long-term play here that looks relatively ripe. Any type of bust outs on oil, and you may have, let's see if we got any activity this morning. Nothing yet. Still like this little puppy. We've been following this since about the 5.5 area. So it's done a triple actually. Slob, Schlumberger, we talked about this one. Again, just kind of really, really relative strength-wise, you can't really complain about something like that. And oil closing above that 43.33 area is pretty significant. Marathon, Petroleum, we talked about, again, buying the strong. This is our daily profile appearing below price action. This is why you don't want to mess around with Apple on the short side. When you have something like this happening and you have, again, just outperforming the underlying instrument situation, you got to be loving life on stuff like that. A couple other ones that we've been looking at, BHI, talked about this one, getting that pop above. Breakouts about 47.49, and here's the daily, and make it easy on yourself. Let's take a look at Exxon. This is one didn't exactly participate yesterday, but found some support around 86.38. We talked about this one, might make another leg down on this one. You got better things to look at from a support standpoint on the oil sector stocks. Let's take a look at PSX. Here's our daily. And again, let's see here. Yeah, I think lofty aspirations on this one are 80.67 right now. So that's where your kind of resistance area is, and you got to kind of take that for what it's worth on PSX. Had a PPI come out. Let's take a look at the S&Ps really quick. Coming off our highs here, 2183.50, those daily infra highs, but again, nothing to write home about. The financial markets commoditized to some degree now. I'm wondering where this trading world's going to ultimately head. Steve and I were going to talk about that today, but we're going to try to have him on Monday about that. And let's take a look at the notes at the same time. After that report, just completely screaming north. And remember, markets like lower rates. And again, you know, you can't ask for a trade that's just right in your face, battling all the markets going straight up and all the other things going on in the arbitrage event when it comes to global rates, and really being able to trade something with ease. We'll be right back, guys.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out, and throughout the week when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, guys. Welcome back to the show. And I think we are honored to have Steve Banger on with us now. Steve, you there?
I'm here, John, and the honor is all mine.
Awesome, man. Good to hear your voice. Hey, listen, what's on your mind? Because you know we've got a lot to talk about in a short amount of time now.
Yeah, I mean, obviously we talked a bit this morning, so I think there's kind of like an interesting situation developing in the financial markets right now, and specifically it relates to a diversion between interest rates, long-term interest rates, and the stock market, and also more recent a diversion between volatility and the stock market. And I usually look at those two things as a potential tool or indicator to identify short-term trend reversal.
Okay. So we're talking about a kind of more of a step back and kind of look at the some of the things that you sent me a couple of charts I've got up right now. I don't know if you're seeing them. Maybe we could discuss those, but it might not be a great, kind of to the tick market timing situation you're talking about. You're just talking about some indicators, if I'm correct, that are starting to lend credence to a possible, just a little bit of a break here.
Yes.
Not necessarily an all out just market complete reversal like Farber's talking about. You know what I mean?
No, no,
Yeah.
you're right.
Okay.
So the chart we are looking here right now is a spread chart of long-term interest rates, the bond ETF, the TLT, versus the S&P. And what is kind of interesting here is that the green and red line is the S&P, which has been making new highs,
Right.
and the bond market on top of it, the reddish line, has been trending lower now for some time.
Okay.
So one of my assumptions is that the entire rise in US stocks is premeditated up on interest rates, making new highs, and basically trending lower. So when I say interest rates making new highs, I'm talking about the prices of interest rate instruments making new highs, and conversely, interest rates trading lower, because those two are inverse. And as you can see, that has not been happening now for about 3-4 weeks. Interest rates are actually trending higher, meaning the price of interest rate instruments are falling, while at the same time the stock market is trending up. And that is typically indicative of some type of reversion or reversal coming up.
Well, I tell you what, I just went out and borrowed a bunch of money at a cheap rate and triple leveraged in the stock market, so I think everything's going to be okay.
Yeah, right.
That's the mindset right now. Can I show the other chart? And
Yeah.
I hear what you're saying. I mean, like that, the market's just feasting on obviously this, low yield type scenario, and that arbitrage, what's going on overseas, is also kind of feeding that. So it's just kind of, like a race to see who's going to get to the end here first. But I'm showing the volatility, VXX versus what here?
So
Price history versus the. Yeah,
actually, this one. Yes, this is the one.
Okay.
All right.
Okay.
So this is much more short term because the scales are so much bigger that we had to go a little bit more short term. But if you look at the chart, the line on top is basically the S&P again, and the S&P is up about 1% over the past months, and the line below is a traded volatility instrument as the VXX, and once again, you see that the VXX has made a low relative to the S&P about, 6 days ago, and has been trending up, like marginally up ever since. And once again, that's the type of diversion which you see not very often. The stock market is making new highs, but at the same time, the VXX is not making new lows. It's rather unusual. So between those two things, diversion in the VXX and diversion in the TLT, which is a bond ETF versus the stock market, I believe it would be a very good time to buy some volatility calls.
That makes a lot of sense. What you just talked about, okay, the volatility is not exactly acting accordingly with the new highs in the market. That coupled with what you talked about earlier with this TLT versus price history graph, what's your version of a pullback these days? If I don't mind asking, because 1 or 2% might be like the world's coming to an end.
That's right.
Yeah.
I agree with you. So there's an outsized chance, I think, that we might reach 4 to 5%, but I think 3% to 4% is more realistic, and from there we have to reevaluate. So in absolute terms, it's not going to matter much, but in the volatility instruments, it might make a huge difference. I mean, just to give you an idea, the last time I was on your show and I made a call to buy volatility instruments was the end of May, and then we had that volatility spike in what it was the second or third week of June.
Right.
And the volatility instruments, like the options I was talking about at the time, made more than 1,000%. I mean, some of those things went up to like 1,300, 1,400%, but pretty much every one of the instruments I talked about at the time made more than 1,000% within a couple of weeks.
I remember that. I mean, you were sending me snapshots of that as it happened, and kind of doing the math, and I was like, my God, that's the trade to get into. So what? Okay, let's just say we're setting up maybe not for like a 100-fold type, on your investment thing. What's the strategy to take advantage of a possible change in volatility, even if we're not even going to have a market like, really coming apart at the seams here? What would be your version of a play on this? Like as far as just basically buying the calls, or how do you hedge?
Yes, I mean, the biggest bang for the money will be the purchase of straight volatility calls. I would go December this year, and be like 100% out of the money. Just buy some, and if the market has any significant breakdown, volatility goes back into the 25 to 30% range, as talking about the VIX index now, so 25 to 30, those things going to go 1,000%. I mean, I know it sounds crazy, but that is how that market functions.
Right, and I know that you are the master of that situation, because I watched you just print money when it comes to those type of plays all the time.
You're too nice. Thank you, John.
Yeah, seriously, man. I mean, like, the listeners don't really understand. I mean, like, I worked with Steve in Chicago. God, what is that? 15 years, maybe more than 15 years ago, and
a lifetime ago.
Yeah, a universe
ago. Right.
So, but Chicago, there's a lot of smart folks up there, and Steve, is one of them. And it's, a lot of those guys up there, Steve, this, they're trying to find ways to really seriously mitigate risk and make the risk-reward ratios. You're going to be wrong, and then you hit the ball completely out of the park with situations like this. And can you hang on? Can you stay on for another segment here? Thanks, guys.
Sure.
We'll be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great
long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show, and we've got Steve Banger on with us this morning. Steve, I've got a new chart up. Can you explain this one?
Yes. So once again, that goes back to our conversation from earlier today, John, when we were talking about the macro environment. And basically what I'm saying is that anybody who thinks that we are really trading individual stock markets nowadays, or by extension individual stocks, kind of like needs to get the head examined. And this chart, I think,
I agree.
Yeah, well, I mean, this chart on some level makes it clear. So this is a chart which goes back about 6 years of the German stock market versus the US stock market. So it's a long-term view on two economies which actually grow at different clips. The German economy in general is moving at a much slower pace than the US economy. Mm-hmm. And apart from that brief period about a year, 2 years ago, the stock markets are completely, I mean, within percentage points of each other. And that is despite the German economy on average growing about 0.75 percentage points throughout that entire period, slower than the US economy. So the question then is, why is that happening? And honestly, I think it's just monetary policy. That's all there is to it nowadays.
Well, the financial markets are I mean, the whole thing is getting commoditized, and how else could that happen? You know?
Yeah,
it's sick. Well, I tell you what, a couple of things that you mentioned earlier. I just want to tell everybody, and maybe you can give your 2 cents on this. You know, a lot of these volatility plays, you don't want to get kind of glued into constantly watch them. You want to wait for these anomalies to happen and these things to set up, and they're not necessarily, like you talked about December calls earlier on the VIX. They're not always there, you know. And for I talk about on a day-to-day basis, okay, this is doing this, just getting everybody up to speed from a more shorter-term standpoint for guys out there who are just kind of in the trenches and trying to, you know, churn out some things on a day-to-day basis. When these types of setups appear like you're talking about, you have to pay attention to them, because these are where you can really, really, you know, when the time is right, you know, really get that risk reward massive. So, you know, how often do you look to do certain scenarios like this? You know, outside of you do a lot of things that are almost intraday sometimes, but how often would these type of scenarios happen, like in your mind, like average-wise per year?
So this one is now the second time this year.
Okay.
There was one in May, which I identified, and this one is basically the second time this year. And it's conversions of opportunity, right? It's never just one thing which bakes the cake. So you have the divergence in interest rates vis-a-vis the market, you have divergence in the volatility vis-a-vis the market, and you have volatility making yearly lows as of this week.
Man.
So between those three things, that is what leads to the call to buy volatility calls.
Well, we're going to be talking about this, obviously, in the next couple of days. On the weekend, we got time to plan a super mega strategy around this. So I'm looking forward to it.
Right.
Steve, listen, thanks for coming on today. This has been a real treat, and I think everybody's really gotten something out of this.
Perfect. All right, John, my pleasure. All right, have a good weekend.
Yep, you too. Basil is going to be filling in for Larry next, guys, so you're in for a treat there. Stay tuned to TFNN all day. Have a good weekend, and we'll pick it up again Monday, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.